Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about the stock that recently announced earnings for the first quarter of 2023. That stock is Etsy, and we can see that over the last year, Etsy is up around 3%, same as the rest of the market pretty much. So they're pretty much keeping on par with the overall market's returns. And so I'm going to look into some of the recent news that came out surrounding Etsy. I'm going to look at their financial statements, and then I'm going to use a discounted cash flow model to figure out the intrinsic value per share for Etsy so we could know if this is a good price to buy into the stock from a value investing perspective. And so right here, this article is titled 5 Good Reasons to Buy Etsy Stock Right Now. Some key points they touch on right here include the fact that Etsy has a strong value proposition, network effects, and the online retail platform's free cash flow can lead to or can account for a bargain price right now. And so if I scroll down here, we can see the first point that Etsy provides compelling value for buyers and sellers. They touch on the fact that with its focus on handmade goods, Etsy is uniquely positioned in the e-commerce industry because their products can't be found on marketplaces elsewhere, and that brings buyers to its sites and keeps them there. Also, they're currently making large investments into artificial intelligence and advanced machine learning technology, and Etsy plans on offering a more conversational shopping experience similar to speaking with a salesperson in a traditional retail store with their artificial intelligence. So that'll be pretty interesting if they're able to integrate that. Also, we can see right here, Etsy knows that helping its sellers grow their businesses is also vital to their success. So recently in 2022, they've been spending hundreds of millions of dollars on advertising, trying to get more people to come to Etsy to buy products, which will increase business and market share for the merchants that are selling on their platform. Etsy, basically, their business model has something of a network effect where basically the more valuable their platform is, more merchants will want to sell on their site. And if there are more sellers, and this will increase the amount of buyers, and if there are more buyers, there will be more sellers, and if there are more sellers, there will be more buyers, and so on and so forth. So it's sort of a cyclical effect. And as Etsy's seller base grows, their buyers grow. As their buyers grow, their sellers grow. Then right here in the third point, they have roughly $12 billion in annual gross merchandise sales on their account, which is a tiny fraction of the online retail market that's projected to grow to $8 trillion by 2026, up from $5.7 trillion in 2022. This is a little table showing e-commerce sales worldwide, basically over the last decade now. Started at about $1 billion in 2014, up to about $8 billion in 2026, or $8 trillion, my mistake. And so obviously, if this growth continues, then Etsy might be able to attain a share of this e-commerce trend, and their revenues and their profits will grow accordingly. Also, lastly, right here in this point, they touch on the fact that their stock might be priced at a discount right now. Currently, Etsy, because of the fact that their share price has fallen 27% year to date, they are far from expensive. Their shares are currently trading for less than 17 times trailing free cash flow. It's a pretty attractive price for a company that's expected to grow their profits by 16% annually over the next 5 years, even after accounting for any short-term macroeconomic headwinds. So some interesting stuff coming out around Etsy. Obviously, they're investing in their platform with AI, trying to increase the value proposition to sellers and buyers. And then on top of that, with the recent decline in their share price, their stock is trading potentially at a pretty good discount right now. Then right here in this Excel sheet, this is my discounted cash flow model to figure out the intrinsic value per share for Etsy. Yahoo Finance is estimating that the company is going to grow to 16%, as the article pointed out. They had $650 million of free cash flow in 2022, $1 billion of debt on their balance sheet, and 123 million shares outstanding, puts their estimated intrinsic value per share at $98 per share, which, as rare as it is on this channel, means that Etsy is currently trading below their intrinsic value per share estimate, since they're trading at $85 per share, and their estimate right here for intrinsic value is $98 per share. So that would make them a buying opportunity at the current share price if they're able to continue to grow their business at these projected growth rates. Then on the right hand side here, I did a little competitor analysis comparing them to their two competitors, Shopify and eBay. These are their results for their most recent full year. In terms of gross profit, it looks like Etsy is on the higher end near eBay at 70%, but we can see from this table that none of the companies were profitable except for, none of the companies are profitable, so not really that much to compare here since none of them are profitable. And also, Etsy and Shopify don't pay a dividend. Only eBay pays a dividend of about $2.12 for every $100 you invest into eBay. So really not much to say about this competitor analysis. Pretty stale. Hopefully the companies will be able to increase their profit margins for fiscal year 2023. And lastly, to end off the video, I wanted to compare Etsy to some of the other companies we've looked at in the past. Etsy is trading below their estimated intrinsic value per share of $98 per share. They're trading at 85 right now. So that does put them onto the rare few companies that we've seen that are trading below intrinsic value right here. Google, GE, Etsy, and ConocoPhillips are the only 4 companies we've seen recently over the last 10 to 20 videos that are trading below intrinsic value. So that does put Etsy in 3rd place. In terms of growth rates, Etsy had a 16% estimated growth rate, puts them in 8th place on the growth rate table. Chipotle has a #1 spot at 26%. For profitability ratios, we saw Etsy had a 70% gross profit margin. That puts them in 4th place compared to the other companies we've looked at. They were not profitable in their most recent full year, so that doesn't put them on the net profit table. And then in terms of stock performance, over the last 5 years, Etsy has returned about 167%. That is good enough to get them into the 7th place spot here. Tesla holds a #1 spot at 1,000% over the last 5 years. So comparing them to the other companies we've looked at, looks like they're actually very competitive. They have a good stock performance over the last 5 years, a good return. They aren't profitable bottom line, but they do have a good gross profit margin of 70%. They have a pretty good projected growth rate of 16%, and they are one of the few companies we've looked at so far that are trading below intrinsic value per share, currently trading at about 0.87 times their intrinsic value per share. And then obviously this table didn't really give us much information just because it mainly focuses on profit margins and dividends, of which Etsy, Shopify, and eBay don't really have much in the way of any of those things. So interesting analysis here. Etsy is definitely an interesting stock to keep my eye on. Their share price has tumbled quite a bit recently, as the article pointed out, so they could be potentially trading at a good buying opportunity at the moment. I'm not too sure. I'll keep my eye on this stock. Let me know in the comment section down below what you guys think of Etsy. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.